Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2025, and we're diving into Washington Trust's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Washington Trust, the oldest community bank in the nation, has just released its Q3 2025 earnings. It's a fascinating report with several key developments to discuss.
Revenue and profitability overview. Let's start with the financial highlights. Washington Trust reported a net income of $10.8 million, or 56 cents per diluted share, for Q3 2025. This is a decrease from the previous quarter. John, what are your thoughts on this?
Indeed, the net income has decreased from $13.2 million in Q2 2025. However, the adjusted earnings per share of $0.56 exceeded the analysts' forecast of 46. The net interest margin improved to 2.40%, up by 4 basis points from the previous quarter, which is a positive sign of operational efficiency.
And what about the provision for credit losses?
The provision for credit losses increased significantly to $7.0 million, primarily due to charge-offs on 2 commercial loan relationships. This is a key area to watch as it impacts the bank's profitability and risk management.
Non-interest income and expense management. Moving on to non-interest income, Washington Trust reported $17.6 million, with wealth management revenues contributing $10.4 million. How does this compare to previous quarters?
Non-interest income increased by 3% from the previous quarter, driven by a 6% rise in wealth management asset-based revenues. This growth is encouraging, especially in the wealth management sector, which is a strategic focus for the bank.
And what about their expense management?
Non-interest expenses decreased by 2% to $35.7 million, reflecting effective cost management. The efficiency ratio improved to 63.3%, indicating better control over operating costs relative to revenue generation.
Strategic initiatives and market position. Washington Trust has made some strategic moves this quarter. Can you elaborate on these initiatives?
Absolutely. The bank hired a new senior executive to lead its commercial banking division, which is a strategic move to bolster growth. Additionally, they acquired client accounts from Lighthouse Financial Management, adding $195 million in managed assets. These steps are aimed at strengthening their market position and expanding their service offerings.
How is their market position reflected in their deposit growth and loan quality?
In-market deposits grew by 4% from the previous quarter, showcasing strong customer trust and engagement. Moreover, non-accrual commercial loans significantly decreased to $1 million, indicating improved loan quality and effective risk management.
Key takeaways. In summary, Washington Trust has delivered a solid performance in Q3 2025, with notable improvements in net interest margin and strategic growth initiatives. Despite a decrease in net income, the bank's adjusted EPS exceeded expectations, and their strategic moves position them well for future growth.
Indeed, the bank's focus on expanding its wealth management and commercial banking capabilities, along with effective cost management, bodes well for its long-term prospects. Investors should keep an eye on their credit loss provisions and strategic initiatives.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Washington Trust performance in the comments below.